Good evening, ladies and gentlemen. Welcome to Walk the Block, where we are navigating digital finance. I am Zenith, your host for this evening, and I'm joined by what is probably a familiar crew to a lot of you guys, but we are going to go around the table real quick and introduce our lovely cast of folks and financial experts tonight. So, starting off with Mr. Agent J. How we doing, buddy? Who are you? What do you do?
Dude, financial expert. I'm broke. What are you talking about, man? Why you gotta embarrass me like that, Z? No. So,
Look, the money might not be there, but we're at least trying to figure out the advice and the knowledge so that when the money does find its way, we're ready for it.
we're rich in friendship. That's what matters. But
There we go.
some of you guys are already, well, most of you are probably going to be familiar with me already. But for those of you who are new and have never seen any of us or have seen anything that we do, my name is Jay. I am the resident great value technical analyst for the DGen Roundtable and for our new show, Walk the Block. So what you're going to see a little bit later on the show is me draw lines on the chart and tell you my humble opinion on where the market is going to go. And that's basically the short and sweet of it. So.
Very cool. We are also joined by another excellent face on camera. We got Dace. How we doing, buddy?
Well, sir, how are you? Good to see you, man. It's good to be on stream. Yeah, I'm
you
Dace.
As well. Looking sharp with the jacket, by the way.
Thank you. It's even down here in Louisiana, a little chilly. It's nice to have it on. Yeah, no, look, I think as Agent Jay said, those of you that know me know that I'm involved heavily with cryptocurrency and a lot of different sort of social groups. I host Telegram Tuesday on the DGen Roundtable as well. I am heavily involved and interested in the Richard Heart ecosystem. And I've been in crypto since, let's see, I guess 2018 was when I first got into things. And so I'm happy to be here, man. Happy to be here with you guys. You know, thankful to have met you guys through CMC courses and through a couple of different iterations of crypto groups now. And here we are, man. Happy to be here.
Fantastic. And closing it out, the man behind the pseudonym, shall we say. Tracker, how we doing, my man?
Doing good. Good evening, gentlemen. Really looking forward to getting into this with you guys. I think you guys are going to be pleasantly surprised on what we dive into here. We've got a lot of stuff cooking. We've been discussing this, trying to get this laid out properly. I think you're going to see a little bit more of a professional show. Not to say that some of the stuff we do in the DGen, it's still extremely informative and great information. As we all know, we're still heavily a part of everything that DGen's doing. We love it. Want to keep that thriving. It's been nothing but a great community. We're just trying to expand upon that even more. I think this is going to be a little bit more of an opportunity to bring people that aren't really familiar with the crypto industry to hopefully open their eyes to this world that is, from outsiders, all they know is it's rugs and scams and everything else that's going on with the landmines and cryptocurrencies. So really looking forward to dive into this and teaching people properly how this whole stuff works. And we're going to dive into a little bit of training, technical analysis, macro events, and really try to be there to help as many people as we can. And really excited about being here, guys.
That is true. While we're at it, we might as well give a brief explainer about what's going on here and what we do on all the other stuff. So, welcome to the maiden voyage of the new channel. The whole point of this one is we are trying to reach a nice wide audience and expand the reach and invite more people into the community, get people educated, trained, and up to date on everything going on in the crypto world so that when we all learn together, we all win together. That's the entire point of what we're doing here, and we're trying to make sure that we have something for everybody, whether it's our Crypto 1-in-1, which is the nuts and bolts segments, talking about some fundamental ideas that a lot of us in the advanced sphere probably haven't touched on, so it's a good refresher. And then after that, we're obviously looking at markets, so we need to know what's going on with the actual thing that we're throwing money at. And then finally, we're also going to close it off with news segments and analysis of on-chain data or any major technical event going on in the sphere so that you are up to date with any security concerns, any threats, any hacks, any big events, launches coming up. That is what we're going for here. As far as anything on the DGen Roundtable stuff, well, if you've been paying attention, guess what? We're still doing all of that too. So this is only more content, and we are looking to expand the horizons a little bit and get more people inside of the stable, as Tracker mentioned earlier. Gentlemen, am I missing anything there?
It's a mouthful. I think you got it.
Well said. Well said.
Beautiful, beautiful. By the way, real quick, do want to give some shout outs to good friends of ours. First up, we had the first person here, Tam Tam, saying, "What's up, Z? Good to see you as always." And we also had our boy Centurion54X. He says, "I'm ready for all the non-financial advice," which reminds me, we do also have this. Boop. Welcome to Walk the Block, navigating digital finance. This is not financial advice. It is financial entertainment and education. We're not telling you what to do with your money. We're just trying to learn how to navigate in the space and be aware of what's going on. Alrighty. After that, we got another good friend, Benny Blanco, excellent guy that runs the Church of Hex Telegram as well. Good to see you.
That's my guy. Good to see you.
There he is. We also got West. He says, "Sup, DGen gang." That's true. That's pretty much everybody in here right now, including our resident conspiracy theory expert, Fox Mulder. Good to see you, buddy. All right, gentlemen. Any final thoughts before we get going into our Crypto 101 segment with Tracker?
No, sir. Let's get to it.
Let's do it. All right. Good sir. Please present your findings. I will show them to our excellent audience, and we will get going.
All right, Zenith, going to bring up that PowerPoint presentation I put together. This is nothing fancy. It's a simple PowerPoint presentation. We're going to start doing an intro to all of these shows we do on Mondays. We're going to be doing an intro to kind of get some of the basic technology back down, the concepts that people just don't seem to understand, and rightfully so. There's so much coming at you. So we're going to go back to some of the foundation building blocks. This is going to be a short segment, 5 minutes, but we're going to be diving into a lot of these things and other things coming down the pipe. But so, for example, Weston here, he was asking questions, and I try to, answer those questions for him in the chat around crypto, how blockchain a little bit works. So let's go ahead and dive into some of this information now. So Zenith, you want to share your PowerPoint presentation?
Yes. There we go.
Thank you, sir. All right, like I said, nothing fancy here, but it's more about the concepts of what we're going to talk about here. So we're going to talk about, okay, what the heck is 1.0, 2.0, 3.0, and then we'll dive into the blockchain. All right. So when we dive into Web 1.0, you got to understand Web 1.0 is what people call is when the internet started. I'm not talking 1960s, 70s where the government had chat rooms set up for them and there's like people doing it at universities. I'm not talking about that. I'm talking about when things became a little bit mainstream. So we're talking about around the late 1980s with dial-up modems. 1.0, those were those 56K dial-up modems you had in a computer, made all those crazy loud noises because it was using the telephone lines to send packets of information. It was non-digital. That's why you heard these crazy things going, because that was that information being translated. Slow, boggy, wasn't the greatest. A lot of the stuff, the websites you went to were very basic, which started to really come around in 1993 is when you started seeing websites and companies. There's only about 100 websites in 1993. Wasn't a lot. All right. So still, anybody who is working on, an operating system, your computer that had, say, Windows 95, this should start to feel a little bit more familiar to you at that time. Very, we're really at the cusp of mainstream starting to adopt PCs. What you saw was a lot of static websites, informational, things like that. Some of them got a little elaborate, like Ask Jeeves was a search engine, things like that. But it was very just informational, nothing else. Okay. That's why you're seeing this here. So in this chart here, you see Web 1. Anybody could read the information. There was really no information going back and forth between the user and the portal or website you were looking at. It's very basic. Now until you move into 2.0. Now, to correct this, there were some sites that were starting to have two-way conversations. Like I said, like Ask Jeeves, you could put in a search engine, it would give you back results. It was great for doing a lot of research at the time. Sped up a lot than having to go to a library. People remember what libraries are? So that Web 2.0 is when you started getting this nice handshake going back and forth between users and the actual interfaces. When I say interfaces, I'm talking about websites and applications and things like that. That's when things really started to get interesting. This is when, late 90s, you probably heard of the dot-com bubble. It was interesting. You had all this money thrown at this development. It was crazy. You could have these startup companies all around the world, and people were just throwing money at these things. They didn't know what the heck they were doing with them, but they were throwing dump trucks of money at this, and people knew it was something important, but they didn't know how to use it. That's where the dot-com bubble busted, because people knew it was going to be great, but they didn't know how to leverage it. Companies like Amazon started coming up in 94, things like that. Go to the next chart and you'll see some of these basic primitive websites here, give you an idea. So yeah, a lot of virtual libraries. Believe it or not, that was welcome to Amazon.com. It was strictly for trading books at the time. It's not the juggernaut today that is in cloud. You name it, they're doing everything now. They are the 800-pound gorilla taking over everything. E-commerce, you say it. So this is where that started. You can see how primitive things were. As it starts to develop, 2.0 starts moving along, things are looking good. Go to the next site. This site here is where I really want to hit home on. So with Web 2.0, the problem is data became very centralized. So I'm sure everybody here has gotten a letter saying your data has been compromised because you were in such and such and it's been breached. Okay, they typically say, hey, I'm going to give you a year protection, and that's about the most they're going to do for you. Okay, so here's the big problem with 2.0. All the data is centralized, and what I'm showing you this is so you guys could truly understand what is the black market for records on the black market. This is about the going rate for stolen data on the black market for what's going. Now, for some of you guys that don't know anything about data and sensitivity and what is, the more sensitive, the more highly desired it is. You can notice that credit cards, $8 to $22 for a record. That's nothing compared to a medical record, which gets anywhere between $1,000 per record on the black market. And you ask yourself, why is that? It's because identity theft. If you need identity theft, if you've got someone's medical record as information, now think about how many data breaches have happened across the world. They start to basically parse all the information together that forms a profile on the individual. Now you can steal their identity, and that's highly desired on the black market because where there's a demand, there's going to be somebody that's going to provide it. That's just why you're not going to stop this. This is not going to stop. Matter of fact, it's going to get worse, a lot worse, unfortunately, with AI and, God forbid, quantum computing. I don't want to get into that, but just letting you know that's the concern here. Let's move on to the next slide. Let's talk about now. So Web 3.0, we always talk about is, what the heck is 3.0? Okay, so 3.0 is basically changes the infrastructure and decentralizes all the information. So it takes away all the information that these corporations are holding centrally and open it up to everybody can see it. And as you can see in the Web 3.0, you can notice how now it's not peer to app or entity. It's across. Everything's cross communicating now, Web 3.0, which is called decentralized. So it's not centralized, it's spread across. People can share this information and see it and all have visibility on what that is. So this relies on something known as a blockchain and cryptocurrency technology. Now, when we say blockchain, all we're talking about is a ledger. Think of it like an Excel spreadsheet, or people who've done accounting. It's just it's a transaction log that keeps track of everything that happens on the blockchain. And this is where all the information is transferred across everybody. If you look at the next slide, go to the next slide. It's very simplistic. So when we talk about blockchain, look at it like this. And I try to explain this to actually Wes in the chat yesterday, I believe. So it is nothing but a ledger, and each of these ledgers has its own block or chain in the block. All your information is stored at each one of these blocks, or known as your address. Okay. Everybody can see what's in that block, but nobody can access it without the C phrases. That's the only one person has the key. So if you think about it this way, it's really important to know that nobody can access it without the seed phrases. So think of it as a vault. Everybody can see, but nobody can access it unless you have the seed phrases. Now, blockchain.
What's a seed phrase?
Seed phrase. Great, good question. So seed phrase is when you set up your address, which is your own vault on the blockchain, you get this address. It's just an alphanumeric number, long string that just says, hey, this is your address, and that is what's on the chain. So that is your address. So it's like any address, like you go to a personal address, your house, whatnot, it's an address on the blockchain that is dedicated to you, and only you have access to that one block on the chain, and only you can access it. So people can send you stuff all day long, but they can't take from it without having that seed phrase. Now, I don't want to get into all the other depths, technology as far as like hardware, hard wallets and all that. I don't really want to get heavily into that because that's more on the protection side we could dive into later. But that is essentially what's going on here. So by allowing the information to be stored on a ledger, so everybody can see this information, all applications can access these blockchains on the block to where they can go peer-to-peer without having to go through an entity and whatnot. I'm going to pause there and see if the guys have any questions around this, because I want to make sure we understand this concept before we go any further.
It makes sense to me. I guess another way I would try to summarize it for people is that Web 1.0, the read-only version, that is the dumb internet. The Web 2.0, where you start having all the data harvesting because you can input your own data, that is the smart internet. And then hopefully Web 3.0, with security through blockchain and distributed ledgers, hopefully that is the secure internet. So.
And to keep in mind, that's blockchain, which obviously Bitcoin was the first one. Then you introduced something called Ethereum that came out right around 2015. That introduced programmable blockchain, which is known as smart contracts. I don't want to get into that concept. That's a whole other thing we could jump into. But I really just wanted to lay out to you guys this very simplistic concept that people need to understand. Your coins are stored on an address on the blockchain, and only they can only be withdrawn with the seed phrase, but anybody can send to it and see what's in there. This is why you should never open up any coins that magically appear in your address, because you don't know, that could be a scam. Those are types of scams we could get into later on. But that's all I wanted to cover. It's just a very high level. We're going to do these short little intros on this stuff, and we will build on them, and we will start to have other things in the works we can talk about further. So I'm gonna pause there so we can keep our time sensitive, keep us moving along on the show. We can certainly ask any Q&A at the end of that. If you people want to dive into any of that questions, we can, but I don't want to derail the show.
Something that I think is worth mentioning right here is people who maybe are not familiar, right? This segment is trying to teach what the blockchain is. We've left them in the lurch a little bit because we've not connected the dots here between like Coinbase and Robinhood, right? Because there's probably folks out there who are interested in learning more about crypto, but they don't have a seed phrase. No random keys pop up in their wallet, right? Why is that, Tracker?
Because central exchanges are essentially, it's a centralized entity. You're kind of going back to Web 2.0. Corporations are trying to hijack Web 3.0 technology and force it to go back to 2.0 because they don't want to, they want to control and centralize everything. So when you look on the blockchain, you'll see coins and information going to these addresses that say, we'll say Coinbase, which is a centralized exchange, you'll see coins going to these addresses. But once it goes into their ecosystem, into those addresses, you have no more visibility of what goes on there. You've completely lost it. And not until those coins come out to another wallet do you see what goes on in that. That's why blockchain technology is great to see analytics and what's going on, but you can't see what's going on within the entity itself because they've gate kept it, they've centralized it. So this is why central exchanges are great in the sense that you don't have to worry about all these other concepts and technology that you have to do to maintain the overhead. But unfortunately, you're hostage just like a bank. People who think your money, you own your money in the bank, you don't. Matter of fact, if something goes wrong, they can legally seize those assets. And it's happened already. And a couple of the Silicon Valley banks that went down about a year or two ago, they went down. People learned quickly that they don't own that money. You can ask the people in Greece when they started telling people they can only pull out $50 at an ATM at a time during a day. So these are the threats that you have when corporations are big. I'm not saying to be anti-corporate or anti-anything. I'm just saying you need to be aware how things really work, and most people do not understand how it works. So that's probably the biggest difference in central exchanges.
So going back to one of your first points, which was that all of finances is a shared ledger, is a balance, right? It's a balance sheet. Like there's goods and services that exist in the world, and then aside from that, it's accounting, right? I mean, our banking system has devolved in terms of the backing of its currency to the point to where we're playing accounting games, right, between the U.S. government printing funds and forcing the public to put a bid in on the stock market. There's lots of dynamics out there that are at play that don't have to do with your dollar being worth a tangible set amount of real world anything, right? And so if the game is all about ledgers, and ledgers on a balance sheet, like you said, when a bank goes down, surprise, you don't own that money that's at the bank, right? Hopefully the FDIC comes in and covers up the mess.
Crypto's not under that regulation just yet, though. Yeah,
correct.
That's a good point. That's correct. A great point, though.
With the bank, that's what's there, right? And that's, people like that it's there because they know the truth of what we're saying right now, which is that it's you're giving your money and it's getting dumped into this ledger that you don't own, you don't run, you don't operate. The same thing is happening when you send your money to Coinbase. Now you're sending your money to a company, and the company has its own balance sheet, and it's going to allocate the money how it sees fit. The cool part about a centralized exchange like Coinbase is the real service they provide, in my mind, is you can transfer your money onto a shared, truly public ledger, right? So banks, private ledger, good luck. Send them your money and hope they give it to you when you want it. Coinbase, same deal, good luck. Send them your money and hope that they give it to you when you want it. But through Coinbase, you can send your money directly onto chain and then hold it through only the means of you interacting with that public shared ledger. which is the actual blockchain. So Coinbase doesn't own the blockchain. Nobody owns the blockchain, right? It is a networked entity that is run by the internet, right? Is run by the infrastructure of all of our nodes connected together. And in that way, in all of our minds, correct me if I'm wrong, gentlemen, that makes the asset intrinsically more autonomous, let's say, to where you have complete control over your money. You are at, so the counterparty risk there is all of the internet rather than Coinbase or Chase or any single one individual spot. So I just wanted to make that really clear for maybe new people who have dipped into crypto, who have bought some crypto on their PayPal or their Robinhood or their Coinbase, to really make it clear, you are invested, you have exposure to the number go up if you're doing that, but you're not really holding your own crypto. And we hope to sort of bring you along that journey into learning more about what it is that you're invested in and how to best manage it. Not really so much when to buy, when to sell, but more the nuts and bolts and mechanics of what you're doing so you can make your own decisions.
Hey, Dace, you brought up a good point. I just want to make sure people understand that concept you brought up about the nodes. So when he says nodes, think of this. There's thousands of computers around the world where people are getting paid to make sure those ledgers stay accurate. So you can't have a bad party go in there and say, I'm going to put some numbers in here and change it. Because all those, they're known as validators. These are just people that are validating the blockchain ledger, and they get rewarded well with it. These are the Bitcoin miners essentially that do the work, and they're make sure this thing's staying in check, and they're scattered all around the world. So there's no government entity that's got one control over anything. It's truly decentralized, and they are being rewarded to ensure it stays accurate. So that's a piece. All it is just a bunch of people with these computers all around the world that are mining Bitcoin, but they're getting rewarded for being validators to make sure everything stays in check around the world. There's a lot more to dive into that, but that's just extremely high level.
For sure. And that's why people know Bitcoin as a hedge against the dollar or a hedge against inflation, right? Because even though it is volatile in the short term, as everyone knows, in the long term, if you zoom out, you see that it is an inverse chart against the dollar's buying power. Anyway, I won't go on further. I have more I could always say about that.
We always do, but the point is we want to keep these little bite size so that we have something for the new folks to come back to every week. Excellent. Good synopsis on what is Web3 and how we got here. I'm very satisfied with it. Jay, are you ready to talk about some charts, my man?
Yeah, absolutely. Just one more thing to point out to the folks at home. It's just very interesting to me that when we transition, and both Dace and Tracker already touched on this a little bit, but you notice that once we transition from Web 2 to Web 3, Web 2 being the heavily centralized nature that it's always been, that when those same companies try to migrate over to now the Web 3 space, they're trying to not reverse engineer, but they're trying to take what is essentially the decentralized nature of Web 3 and bring it back to Web 2. There's a reason for that, because the people in power want almost everything controlled by them. There's a reason why, for example, JP Morgan Chase, even though their CEO, Mr. Jamie Dimon, has been a crypto bear for as long as I've heard him speak about crypto, JP Morgan Chase has its own private blockchain, which is the Onyx blockchain. It's called Onyx. So there's a reason why they do that, because they don't want you, the average Joe and Jane, seeing their business, which is the beauty of crypto in general, right? Because everything is transparent, right? If you know how a lot of people always complain, like, hey man, where are my tax dollars going? What are they being spent on? Well, if the government were so inclined to use Bitcoin, for example, we would be able to see where the funds from the taxpayers are going. Or like even some more common things, right? People always ask like, hey, I'm making a donation to this particular entity. I'd like to know if they're actually using the money that I donated to the cause that I donated to, right? And this kind of technology allows that to actually be possible. But again, right, there's the value in privacy, and the people in power want things as private and as centralized as possible. They don't want anybody seeing into their business. So that's why they're trying to shift things around. And that's exactly why we have to be aware of that kind of stuff, because we want to fight against it, right?
And just to add, JP Morgan's been buying Bitcoin for quite some time while they've been telling everybody else that it's a big scam. So keep that in mind. Yep.
Diamond has.
Yep. Them and all the other very, very powerful entities and especially universities like Yale and Harvard and the elite families have been buying it hand over fist. Now, what that could be just a hedge, but regardless, they're buying it. They've been buying it and hoarding it because they want to hedge against not losing control.
Excellent. All right. I see a screen share coming up. So let's get after it and talk about some markets.
Yes, sir.
Jay,
here we go.
What are we starting off with tonight?
I'm going to draw some lines on the chart. As always, we're going to start off with the cryptocurrency, the king, which is Bitcoin. For those of you who have been paying attention, you obviously know that Bitcoin just hit another new all-time high yesterday. I think we touched 107. We got close to $108,000 for Bitcoin. So well within our predictions. If you guys have been following along the analysis on the DGen Roundtable in our Telegram exclusive content, you know that we have a target for Bitcoin within Q4, early Q1 of next year of around $115,000 to $150,000. And it seems like we are right on track to hit some of those numbers a little bit sooner rather than later here in Q4 of this year, which is great because the expanded Santa rally is it's in progress. So we are currently on day number 43 of the 60-day cycle, and we have basically shifted in trend, right? We now have 2 consecutive right translated cycles. I mentioned earlier during the week that the possibility of us getting a neutral cycle, which is a high either before or after around that day 30 mark, is very unlikely. And lo and behold, we got a new cycle high for Bitcoin on Sunday, right? I believe it was like late Sunday, just before I think they went on stream, Z and Will. So what can we expect in terms of price action for the rest of this quarter? Well, a little bit of a review for the timeline. If price stays bullish, then that means we're probably going to be looking for a cycle high, continuing to look for new cycle highs all the way up until day 45, right? Which is Thursday of this week, into day 55, right? That's the average of about where we see our cycle highs for our right translated cycle, right? And then we're going to start looking for a cycle low, right? So for those of you who do swing trading, you're probably going to be taking profits within the next 1 to 2 weeks. And then you're going to be looking to buy back in if you were so inclined sometime during the first week of January, because our cycle low is expected to come in around the 3rd of January 2025. Now, what can we expect in terms of price action? Right, so we're going to analyze this structure that has been developing here, right, over the past few months. We're going to go a little bit granular into our 4-hour chart and turn off our 60-day cycles. That way, it's a bit cleaner to see. All right. I mentioned that we have a double 1-2 scenario developing on our chart. It's not uncommon. It's not uncommon for a lot of these double 1-2s to occur during like very bullish trending markets. And so what you have here is a purple wave 1 and 2 already finished. And then you see these sub-degrees, right? The red ones. They're part of that larger wave 3 structure that is forming, and we are waiting to finish. So you have a 1, 2, 3, 4 in red, smaller degree, already in. We are looking for a wave 5 to complete this larger purple wave 3. So what can we expect in terms of price? Well, if you take a fib extension, right, from the start of that red wave 1 to the finish of the 3, to the end of 4, and you're going to get some targets here of anywhere between $115.4 thousand Bitcoin to $142.8 thousand Bitcoin, right? Common extension for a wave 5 usually lands us somewhere in between the 382 and the 618. So within the rest of Q4, right? So within the next 2 weeks, heading into the Christmas time, $115,000 to $130,000 Bitcoin is certainly well within the cards. And those prizes should be familiar for you if you've been watching us on the DGen Roundtable for a significant period of time, because we've been calling for these prices for the past few months once this structure really started maturing. Right? So what can we expect in terms of potential downside if this price action has reached its peak and we are going to start looking for cycle low. Let me turn some of these off. Right. And we're going to make an analysis of this structure over here, right? Because this, right, it looks impulsive, right, to complete that wave 5, but this at the current moment, right, can still be corrective. Right. And what we're seeing here is a potential flat pattern forming. Right? You have your A wave here already in, your B wave looking to be in, right? That was our recent high. And then our C wave going to come if it was a irregular flat pattern, right? You're going to expect some downside all the way back, and Bitcoin possibly going back down below the $100,000 area. Your target is 98,168, right, to complete that flat pattern. But if we do get a more traditional flat pattern, right, that would be an irregular one. If we get an expanding flat, then what you're looking for is for your C wave to extend all the way down past the endpoint of your A wave. So we're looking at this 1.618 extension, which puts us at about $92,636 for Bitcoin, right? But again, right now we have a bullish bias because we are in a right translated cycle. But for those of you who have watched me for a very long time, you know that I have to give you both the bullish and the bearish scenario because you need a plan for both. You cannot just have a bias towards one side because if things go in the other direction, you have to be able to pivot very quickly. So I will keep the analysis right there. I usually go a little bit more granular with the TA. However, we are on a bit of a time limit here, so I will leave it there. Zenith and base and tracker, if you would like to add anything else to this analysis, then go for it. Just one more thing before I leave, which will probably lead on to the next topic of conversation. Remember that the FOMC meeting is set to go live on Wednesday of this week, which means if we get a dovish Jerome Powell, right, and what we expect to happen is we're going to get another 25-point cut, then that is going to inject a lot more confidence into the market that things are going as they're supposed to be going, and will probably push us to new highs for Bitcoin as well, because that's really the final big piece of news that we're looking forward to at the very end of this year. We got the CPI print last week, which was well within reasonable numbers as expected. The labor market data came in really bullish, and so things are looking up in terms of the big economic news that we pay attention to here in the West at the minimum. So,
true. To give a quick synopsis of what I just saw from you there, Jay, is that if we look at time, we have two time factors. The macro time factor right now for the Bitcoin 4-year cycle, absolutely a bull market. Price is also confirming that, same as the momentum and the trend. On the micro scale, our 60-day cycle, for those that don't know, this is the 60-day cycle made famous by Bob Lucas. It is based on the Forex 20-day cycle, but in the crypto markets, for Bitcoin specifically, we measure cycle low to cycle low, and it's been shown that about every 60 days, there is a cycle low. And what we're talking about here is whether or not these cycles are right or left translated. What we have here is a high on day 42, which means more than likely it's going to be right translated, and it's possible there could be yet another high to come. So based on that, it's reasonable to believe that there's a good chance we might get a little more upwards momentum, especially considering that our momentum indicators, or the trend right now, is showing that we are following that trend as of right now on both short, medium, and long-term time schedules. And then finally for price, Jay, you identified some key areas of potential support to build. Right now, we are in price discovery, which means that there's no trading data for where we are at as of right now, except for like literally 24 hours ago. That is it. So the ones that I think we identified is the $100,000 mark. That is a key psychological resistance area for sure. And I think there's an argument that there's a beginning to see a level at $102,000. And additionally, I think we might be looking at a lower support of $92,000 starting to form. And I believe that that one is also backed up because right now the 50-day moving average is sitting at about 90,000 and change. So give it a few days and it's going to meet up right at that level. And that could be a definite possibility for a cycle low coming up in the near future.
Yep.
Overall, though, Bitcoin continues to look very, very bullish and very strong. And we are still in price discovery, and we expect more price discovery to come in probably the next 6 months.
Yeah. This is definitely going to be a good profit taking opportunity for those of you who are so inclined to swing trade, right? Because even though the trend is up and to the right, our momentum indicators, when it comes to, for example, the RSI, the MACD on a larger time frame, right, they are starting to show some bearish divergence. And that basically just means that when you get a higher high end price, those momentum indicators start clocking in lower highs, right? That's what we call bearish divergence. And those appearing on two indicators, right, on a large time frame tells me that even though we do have the potential to look for higher prices over the next 1 to 2 weeks, that momentum is slowing down, which makes sense in terms of time as well, because we're nearing the end of the 60-day cycle. The volume is also starting to decrease significantly. If you compare on a large time frame, the daily, for example, the amount of capital being injected in the market when we broke 100,000 versus now when we're making 105, 106, 107,000, close to $108,000 just on yesterday's candle. That capital, that volume candle is starting to get smaller and smaller and smaller and smaller. You would have seen that on my chart as well, those little bars at the very bottom of the analysis. That's your volume candles, right? And they got smaller and smaller and smaller. So that's telling me that the volume is slowing down. The momentum is slowing down. We are at the very end of the 60-day cycle, right? So on a time scale, and that tells me that, yes, even though we're going to make possibly newer highs, then it's probably going to be a good profit-taking opportunity for some folks before we correct anywhere between 10, 20, at the maximum, probably 30% sometime in January.
Fair enough. Dace, do you have anything to add?
I don't think so. I think we're going to keep it going. I would like to go ahead and touch back. We're using a couple of tools to get this done, right? We talked about Elliott wave. We talked about fib retracements. We talked about left and right translated cycles, the RSI. We're going to cover all those things as we move on forward, for those of you that are new. But bear in mind, these are all independent analysis tools, right? That you're running, you're looking at the chart through certain filters to try to glean information. And the more of those information that you can glean to tell a consistent story, lots of people like to invest based off of that, what they call confluence of data points around. Zenith even mentioned something as simple as a moving average, right? In an asset like Bitcoin that's super volatile, an average of the price over time it can be super helpful. And so, no, I don't think so. I think Agent J is it's very evident that Agent J is highly adept at these tools. It's our goal to not only teach you how to use the tools, but how Jay looks at the chart, so that you can make your own decisions. Like, Jay gives you your bull and your bear case, you make your calls. Zenith and Jay don't always agree on the TA, and that's always a fun time to watch. And it also is educational, right? Because it's where we're all constantly honing our perspectives and viewpoints against each other, so that hopefully we can come to a more wise understanding as a group. And so that's a big part of what we do here. We do a lot of different things as a group and as a community of people. People are like, what does a crypto group do, right? That what we just talked about is a big portion of it. It's honestly just honing your ideas against other people. Zenith brought up the moving average. Agent J is working with Elliott waves, right? And we'll dig into more about what those look like and how they work. Just an observation about how we talk about these things.
Yeah.
For the new folks.
Very astute observation there, Dace, because yes, the tools that I use, for example, are my tools personally that I like to use. And that's the way that the tools that I use allow me to filter, like Dace said, right? A lot of the noise that goes on in the market. The tools that I use might not be the tools that you like to use. For me personally, they're just the ones that have allowed me to, I always tell folks, as an investor, you want to win more than you lose. And personally, those are the tools that have allowed me to win more than I lose. And so that's why I have a bias towards them. Even if you were to use the same types of tools that I use as an analyst, you might have a different way of using them, and you might interpret the charts a little bit differently, right? Here at the, here as a community, what we try to encourage always is you lean on us to learn, to get some to get your to get some legs under you, right? And then eventually what we want to be able to produce is individuals who are competent enough to do their own thing, and then hopefully in the future also be able to teach it to other people as well, because that's how we all started, right? We leaned on our mentors, right? We did the analysis the same way that they did, and then over time, as we practice and practice and practice, we developed our own methodologies for analysis and for trading and for etc. And that's one of our big goals here, right? Is to create independence through the people that we hopefully teach in this channel and our our other endeavors over at the DJ Roundtable as well.
Excellent. Well said, gentlemen. While we're on that, let's keep the momentum going, because there's one other token we want to talk about for technical analysis today, and that is Ethereum. So, Mr. J, if you don't mind bringing back up that chart, I think there was a notable event that happened in the last 24 hours on Ethereum. What was that?
Oh, I was gonna suggest, Z, since you take the Ethereum chart, so the
okay.
chat just doesn't hear every single analysis from me. So let's make it a habit that if we're gonna do Bitcoin and Ethereum, I cover one, you cover the other, whichever one we do. We'll decide pre-show.
Fair enough. All right, folks, we are looking at the Ethereum chart on the 1-day time scale. Price right now, as of this second, is $3,987, but I'm more interested in this little thin wick the day before the current candle. The candles close based on Zulu time, aka 0 time over in England, Greenwich, England, to be specific. So for us, I'm in Mountain Time Zone. That's about 6 p.m. for me, and it's 6:45, which means new candle for the day. So this one we're looking at in the past. This is the one in particular. You might notice we just barely touched and broke the $4,100 level. That is a new high for the year. And Ethereum has notably been lagging Bitcoin severely, or you could also say that Bitcoin has just been outperforming the rest of the market. I think that interpretation makes sense, largely because in the way that the crypto markets work, at least we've observed over the last, 16 years now, is that Bitcoin is the first mover, and then everything else kind of follows suit. So that's what we're looking at. Ethereum finally has made a new all-time high. It's taken long enough, but at the same time, there is some good news on this one. I think that the Ethereum chart is showing a little less volatility, especially in this last leg up, than the Bitcoin price. But at the same time, we are still getting some of the usual crypto noise going on. But one thing in particular is that this purple line here, that is my 20-day moving average. On this last move, starting in November 4th, it's actually been respecting the 20-day moving average pretty well and staying nicely above it. Additionally, my moving averages are starting to switch how they're stacking up, and now they're lining back up where we have our 20 on top, our 50, and then our 200. What this is showing is that our short term is higher than our medium term, is higher than our long term, and they are all starting to move in the same direction, which shows less noise and an overall direction for the market. So Ethereum has been our number 2 coin. I like to call it the number 2 blue chip coin in the space. Bitcoin's obviously number 1. Ethereum's number 2. And this cycle, I think we might settle on a third as Solana. I think we're already seeing a lot of case for it based on just size, transactions, and overall sentiment as well. But overall right now, it is a big day for anybody that's been holding Ethereum and been left wanting for pretty much the past 2-3 years at this point. So hats off to everybody that has stuck it out, or especially anybody that made a nice little DCA down here back at $2,300. That is almost a 2x on your most recent investment. But other than that, I expect that our RSI is going to start to maybe cool off a little bit, although I would not be surprised if we have one final little bump up to the right as Bitcoin starts to make a final cycle high, as we have been predicting. So is Ethereum going to go much higher? I think it's got a little extra juice in it. At the same time, though, I think I would not be surprised if we came back down and retested our 20-day moving average just to make sure that we are still continuing the trend. As far as prices, though, once we get up into price discovery, could be anybody's game. At that point, we're looking for the Fibonacci levels, and then for the retracements, to be honest, I think maybe the $3,600 level has a convincing argument, but also at the same time, I would like to see that 4,100 level start to get flipped into a support level as well. So that is what I'm seeing on Ethereum. Big news and overall continuation of a trend.
Yeah, can you zoom out just a little bit more, Z? Because you could clearly see there, right? Something that we didn't mention for Bitcoin is that Bitcoin had already been well above. It has already broken out of the channel that it's been trading in for the majority of this year. But if you could see on Ethereum's end, right, we still haven't broken out of that horizontal channel that we've been trading in, right? It's actually testing the very top of that channel at this moment. And so, like Zenith said, it would be very nice if we can break above and then start using that channel as support. But if we collapse back down after a last lunge into the end of the year, right, I'm thinking anywhere between $4,300 to $4,500. Those are my next targets for Ethereum within the short term before we head back down for a cycle low. So if we could use the top of that channel as support, it would be fantastic. But that $3,600 area has strong horizontal support on it as well. So I firmly believe that if we lose 4,000 again, then 3,600 is going to be strong support for Ethereum on the way back down.
Hey, question for you, Jay. Where are you getting the 43 and 45? Is that Fibonacci as well?
Yes, sir. If you do an Elliott wave analysis, the Fibonacci levels for Ethereum as it stands land you somewhere in between $4,300 to $4,500 within the short term.
Okay.
Jay, where did you do your fib extension from?
Here, let me go ahead and switch to my screen, Z. That way it's going to be a little bit easier. Instead of me trying to coach you through it, I'll just show them my.
Fair enough.
Okay, here is our Ethereum chart, and here is the fibs that I pulled. Let me go ahead and clean this up a little bit for you folks. Turn off the cycle highs and cycle lows. All right, same. So that 2.618, that area is what I'm targeting, right? That's taken from the start to the end of this purple wave 1 to the end of this purple wave 2. And that is going to give you a target for that wave 3. We've already hit the minimums, right? The 1.618, the 2.618 is that 4,300 that I spoke about. And then if you want to get a little bit more granular with it, right? The 112 like we had on Bitcoin. The 382 and the 618 puts us at, once again, that 4,300 level is coming up a lot on the fibs. And then at max, a new all-time high for Ethereum by the end of the year at about $4,900, $4,961, right? But that there's a reason why that 4,300 is a magnet to me, right? Because there's a confluence of fibs there when I do my Elliott wave analysis for Ethereum. So.
Excellent. Does that answer your question, Tracker?
Yeah, it does. I know I was saying the same thing. I really want to see it close above 41 because that's just been that line in the sand that has not seemed to let it break out. It's been frustrating to watch. But yeah, appreciate it.
I think, it is going to lag still somewhat, right? I know we are transitioning slowly but surely into alt season, but remember how long Bitcoin got rejected at that $73,000 level, right? Before we had that breakout. We had to retest that $73,000 level multiple times. And I think it was at least 3 or 4 times where we got rejected before finally making a strong breakout. And so really, this is only Ethereum's, second retest of the $4,000 area?
Yeah, it was about 4 or 5 times. Yep.
Yeah. So, do I expect it to break out strongly and keep going? That would certainly make me happy. But there's going to be some profit taking along the way, especially over the next few weeks as we look for a new cycle high.
It took 8 months to finally break through that.
There you go.
That's true.
That's why it's important to hold.
Mm-hmm.
Yeah, but if you think, I hear you, but you can also make the case that it's been trying to break through that thing since March as well. So it's been going on for 8 months as well. It tried it back in March. Ethereum then tried again roughly in May, but it started following the same thing with Bitcoin. Then it fell off a cliff right around June, July, and then it's now come all the way back up, and now it's trying to test it again. So I don't. It's already been trying to break that 4,100 level. Going back since March. Same thing as Bitcoin. So I don't expect it to last that long. Nowhere near that level, but yeah, it's been a grind. But that's how the rotation from Bitcoin into alts go.
Yeah. I think the time that we break out strongly for Ethereum and don't look back to the $4,000 price point is probably from February to March, right? That next 60-day cycle, I think that's when Ethereum breaks out strongly above 4,000, starts closing consecutive weeks above it, and then we don't look back for the remainder of the bull market.
I agree. That makes sense. However, for our cycle top, I do want to ask you gentlemen about if you think our upcoming macroeconomic event is going to be the case for that. So what I am referring to, obviously,
I think so.
to us, but maybe not to everyone else, is the Federal Reserve. So we are looking at a Fed meeting on December 17th and the 18th. 17th they start, 18th is when they release the results, and we get our favorite Jerome Powell in front of the mic to talk to the reporters and sometimes give them a little lip back if they're being a little harsh on him. But overall, right now, what we are predicting is, or at least FedWatch, the CME Group FedWatch tool is predicting a 99.1% chance of a quarter point rate cut. I don't want to say the market has decided because the market doesn't decide, but I think the market, or the futures market, which is it's based off anyways, says, yeah, we're willing to bet the house on this one and say that agreed. Jerome Powell mentioned starting back in September, we were going to have a series of rate cuts to close out 2024, and this should be the final one of the year. Gentlemen, any deviation from the conventional wisdom as we see?
I mean, just a little bit of commentary. We've been covering these sort of target rate probabilities in Telegram Tuesdays over in Dejan Roundtable. And it's really funny because if you look at the past X amount of them, they've all been 80, 85 or more prior to the meeting until the pivot. And the pivot meeting, it was like a tug of war, 60-40, 70-30 both ways. It was flopping back and forth. And now I feel like we've seen Bitcoin break out over $100,000, right? We've seen the Russell 2000, we've seen S&P, gold, all-time highs. And so it feels to me like the longer trend of, what is it called? Indecision is over, right? Like the market has decided, okay, we're doing this now. There were habitual raises in the interest rates, and I think we reached a bit of a boiling point, which we felt during, 2 meetings ago now, where it absolutely flipped the day of the meeting in terms of 50 or 25 basis point cut was the debate the day of the meeting. And so don't be surprised if you see a lot more of these meetings come out looking a lot like this one, where it's 80 to 90%, 25 point cut, keep it moving, right? Because we know now, the market knows now, these predictors know now that Powell is a consistent, he's a very methodical guy, right? He said he was going to slowly raise them in incremental fashion rather than crank them all the way up to the ceiling, and that's what he did. And now he's saying he's going to slowly bleed it down. And so let's watch and see if he gives us reason to not believe him moving forward.
That's true. And just to give a little context about what we're seeing here, because Dace, you laid that out perfectly. That is exactly what we've seen throughout the majority of the year up until we had that Fed pivot. So this chart that we're looking at here, by the way, these are stacked area charts. So effectively, the more color you see, the higher probability it has for whatever that rate is to be the decision at the next meeting. So this one in particular is the 31st of July. This is before the Fed pivot. And you see, as we get closer to the date, the probability of no change for this one became overwhelming, and then we got confirmation finally. Now, in September, this is where things got kind of wild, because if you remember, this giant purple spike right here, that day, that low, that was actually Black Monday when we had the ending of the Japan yen carry
trade.
Carry trade, thank you. So pretty much it was Japan raised their interest rates from 0 to 0.25 for the first time in like almost 2 decades. And that really shocked the market to the point where a lot of people came out and were asking for this purple zone, which is a immediate half-point cut to the rate. Or sorry, this is actually this was an immediate half-point cut. And then eventually they cooled off a little bit. And they're like, all right, probably quarter point. And then like Dace alluded to earlier, we got to the week of, it immediately shot right back down. And they said, nope, we need that full half-point cut. And then since then, we've had very similar, or a steadier trajectory for the rate cuts. So this is the last meeting that we had where we got a quarter point cut, as you can see by the green area here. There was a little bit of a concern about having a no cut, or we even had the half point cut here in the orange area. But again, market kind of came to its senses and we ended up with a quarter point cut. And now we are at our meeting, which is the one coming up this Wednesday. So what we see is that the orange area here has really taken over, and the market has accepted that, yes, we are really just going to get a quarter point cut as opposed to this one, which I believe is a no point cut. So that is where we are at right now with the Federal Reserve. As far as the analysis of, okay, we understand what their decision is probably going to be. What's that effect going to be on the market? What do you gentlemen think? Has this one already been baked in, or are we going to see an outsized effect in the price of traditional finance or even crypto markets?
So this one is an important meeting, not just because it's going to inject a bit more confidence into the capital markets because of the rate cuts. However, remember that we are also getting a summary of economic projections during this meeting, which we did not have during the last FOMC meeting. And what the summary of economic projections basically is that all of the members of the FOMC, they get together and they talk about what their projections are based on all of the important metrics that they take into consideration about how the economy is going to look like further down along the line, right? And so the reason why that's important is if the FOMC comes out during the SEP and they're fairly bullish or at least dovish, right, that they have a positive outlook for the economy over the next few quarters, right, or even just the next quarter or so, along with the decent labor market data that we got, along with the CPI print that was well within expectations, I think that if we get a fairly bullish or even just dovish SEP, right, summary of economic projections from all of the members of the committee, then that it's going to inject even more confidence into the markets, which will probably push prices up everywhere, not just in crypto, right? Not just Bitcoin, Ethereum, and the altcoins, but probably in all of the other assets as well in traditional finance. So I think this FOMC is more important. And I think the SEP is going to give us something that has not yet been baked in, as opposed to the 25-point decrease that everybody's already expecting.
Jay, I think that's well said. I think something that came to mind from what you've said was that the forward projections, right? What I was going to say before you chimed in was about the same topic, but instead of it being about the details from the notes, it's really more about if we operate in a 4-year cycle, then certain time boundaries unlock certain price movements, certain behaviors. I think the last FOMC of Biden's presidency of 2024, of a collection of administrators rolling over to a different collection of administrators, I think you're going to see this meeting, like you said, predict really, really bullish future outcomes in the near term for the U.S. Absolutely.
Yeah. Excellent. Any final thoughts on the Federal Reserve meeting this week, gentlemen?
No, sir. Just keep an eye out on the summary of economic projections. And if all of the committee members are pretty bullish, that's going to be fun times, man.
Excellent. I, too, am looking forward to getting the data. I enjoy going through it and picking it out and seeing what their little outliers are and seeing what they actually project inflation is going to be in the near future. But overall, every economic indicator as it stands is looking pretty steady. So it seems like it could be smooth sailing, or it could just be a boring December. Who knows? That's my theory anyways.
I want my Santa rally, damn it.
That's true. Crypto is 24/7. Traditional markets, not as much. All right, gentlemen, let's move on to the main event of the evening. We're going to be looking into the crystal ball a little bit and looking at some of the most recent picks by the Trump administration and also some internal government politicking about who is the new chair of each of the financial committees. So with that being said, we do have a nice little screen share for you here. So, small video. Let me know if you have any issues with the sound, and I will restart it. But I think we should be good to go. Ready? Here we go.
President-elect Donald Trump just tapped a crypto-friendly face to chair the Securities and Exchange Commission, fulfilling a promise he made to the cryptocurrency community. Paul Atkins served as an SEC commissioner under President George W. Bush. And in the early 90s, he was on the staff of two former SEC chairs, Richard Breeden, a Republican, and Arthur Levitt, a Democrat. Atkins founded Potomac Global Partners, which advises banks and investment firms on regulation and compliance. Trump said in a Truth Social post Wednesday, Paul is a proven leader for common sense regulations. He also recognizes that digital assets and other innovations are crucial to making America greater than ever before. In recent years, Potomac started advising clients on cryptocurrency-related issues. Atkins is generally seen as a crypto advocate who's in favor of looser regulation in the space. As co-chair of the Digital Chamber of Commerce's Token Alliance, Atkins helped draft best practices for crypto trading platforms. Trump embraced cryptocurrency in the last few months of the election, giving a keynote address at Bitcoin 2024. During that speech, he promised to fire current SEC Chair Gary Gensler and get someone more friendly to Bitcoin in the seat.
On day one, I will fire Gary Gensler and appoint a new SEC chairman. I didn't know he was that unpopular.
Gensler has since announced he would step down from his role the day Trump is inaugurated. The biggest criticism of Gensler regulating crypto has been that he treats it as a security. Instead, crypto advocates say it should be treated as a commodity or digital currency and out of the purview of the SEC. A high-profile example of Gensler's regulatory actions against crypto is a case against crypto exchange Coinbase. The SEC accuses the exchange of failing to register as a securities broker and allowing unregistered assets to be sold on the platform. In an email to Straight Arrow News, former Commodity Futures Trading Commission Chair Chris Giancarlo, who works with Atkins on the Token Alliance, says Atkins' engagement with crypto goes back many years as an advocate for blockchain and digital assets. As SEC chairman, he will embrace technological innovation, including digital network finance, after years of SEC hostility and regulation by enforcement. Paul Atkins will return the SEC to its proper role in enabling capital formation and powering American economic growth. Atkins.
All right. A little bit of a lengthy clip, but a lot of good stuff in there. And fun fact, Chris Giancarlo, the man giving the quotes at the end there, he is the head of the Commodities and Futures Trading Commission, and he was actually at one point also being considered for the same role, but he actually came out and said, no, I don't want to clean up Gary Gensler's mess again, respectfully decline. So
yeah, he was like, that's a pass for me, dog.
That's true. But overall, Paul Atkins is going to be the new guy coming in to replace Gary Gensler. Nothing is confirmed just yet, and I don't believe that this position requires appointment through the Senate because it is not one of the cabinet level positions. However, the president is able to appoint heads of federal agencies. And also keep in mind, there's 5 chairs that lead the SEC, not just one. So it does take a group effort, but a lot of times the people that are surrounding the chair, usually they fall in line to a certain amount of degree. But we have seen some recent pushback in front of Congress, which has been interesting to see.
He does have to be confirmed by Congress, Z, but
Thank you.
We retained Congress, and Congress in general over the past few years has been very pro crypto, whether it was from the left or the right. The majority of Congress is fairly pro crypto. So I don't think if Paul Atkins does decide to accept that nomination from DJT, I don't think getting him confirmed I don't think that's going to impose any significant hurdles for him. So if he takes it, wonderful. At the very minimum, we can expect that he's not going to be hostile towards the industry. And at best, he's going to be very pro crypto. He's going to work towards creating a regulatory framework that is actually transparent and that the entrepreneurs in our space, especially here in the West, can follow. So that anybody who wants to register as security can register as security. Any crypto company that wants to engage in business does actually have a framework to follow, and they're not just having to fit a square peg into a round hole like Gary Gensler has been trying to do over the past few years, because he believes that crypto in general, that the regulatory framework for securities is enough to impose onto crypto, and we've seen the ramifications of such thinking, and it hasn't been good for him because he's lost quite a bit.
Jay, I have a feeling he won't have a problem, getting into the job through Congress, because Congress is fighting enough fights against other picks that Trump has made. This is not one of his more controversial and one of his spicier picks, in my opinion. This guy was already the SEC commissioner from 2002 to 2008. That's a period of time that, economically did pretty well. 2008 was the financial crisis. He stepped down at that time. Was he the head to roll for it, or was he responsible for it? I'm prepared to say, I don't know how much we can lay at the feet of one man. Good, bad, or otherwise, he's held the position before. I don't expect Congress to put up a fight here when they have other bigger fish to fry in terms of pushing back against other Trump picks. That's just my take.
Agreed, Dace. I think you nailed it. And additionally, it's something I discovered during my research today. But this is actually not his second appearance at the SEC. It's actually his third appearance at the SEC. Back from 1990 to 1994, he didn't serve as a commissioner, but he worked under some of the commissioners. So he has a very long track record of being involved in the SEC, being involved in traditional finance, and I think as long as crypto's been around, he's actually had a pretty good track record for being a crypto advocate and learning about the technology as it's evolved.
Yeah. You guys made very good points. I think if I were to, if I was in Congress and I'm like looking at the candidates, well, this guy has a track record spanning more than a decade, being involved with just the Securities and Exchange Commission. So it's a no-brainer, right? It's like promoting from within, basically.
Yeah, look, even if I'm hardcore Trump opposition, there are lower hanging fruit to go after, right, than this guy. That's how it looks to me.
This is true. One final note on Paul Atkins, though, is that something taken under consideration is when he comes in, how much is he actually going to be able to do? Unfortunately, the way that Gary Gensler tried to run the SEC was regulation through enforcement, aka litigation. So one of the big questions is, I don't think this guy is just going to come in and tell the entire legal team, drop everything you're doing. We're going to reevaluate everything. I think a more measured approach is probably what we're going to see. And we're going to see that he's going to come in and he's going to bring some good people with him. And he's going to start evaluating all of the active cases one by one. And they're going to see if there's action that can be taken to either mitigate, negotiate, or if it's truly not a good case, hopefully makes the decision to withdraw any of the complaints that have been alleged.
I can think of at least one.
I think we all can for sure.
But it's not going to be any immediate changes. He's going to come in here and evaluate what's going on and do his dissecting like he always, just like a good leader does. And of course, he's been here. He's been down, like you said, multiple times, early 90s and again in the early 2000s. He's going to be very familiar with this whole political game. Like you said, everything's been greased for crypto. Everything. Like I have yet to see any major hurdles. It's kind of crazy because we're so used to being beaten down as a crypto industry that this feels uncharted. Like we're waiting for the gotcha. We're waiting for the rug. And it's like, I think we're more like that. We're more like a beat down person that's been beat down so long. It can't be this easy. So I think that's why we're a little bit more skeptical on everything. But so far, it's pretty much clear sailing what the people have been objected. Congress, everybody is getting very pro crypto. I think it's just another result that they're realizing they can't stop it. The whole thing, they've been trying to fight it. They know they can't stop. They can slow it down. That's what GG was brought in for, to slow this thing down. And he did his job. He'll be rewarded very well for slowing it down to allow TradFi to get its tentacles into it and the government to figure out how they're going to deal with this. And then now that they're opening this up, they're realizing now they have to compete with the other global entities that are starting to adopt to it, and they have to from a strategic standpoint, which is where I still think they're going to come out with some type of strategic reserve. They've been buying crypto. The U.S. government has been buying crypto for quite some time. This isn't a surprise. I think that's more of a surprise for most people because they probably don't realize that that's been going on, but it has, because they have to combat against the BRICS and the other countries and the macros that are going into place, because there is a major chess match going on internationally, and everyone's trying to play, lean to something that nobody else controls, and that's Bitcoin. I mean, the big red flag was just a year ago when the BRICS started trading commodities in non-US dollars. First time since US dollar reserve was the world currency. So there's much bigger, it's such a large scope than just crypto adoption. This is very much a chess match between the powerful entities and countries around the world. So I can't imagine the United States trying to stymie this any more than they've already done. They've gotten away with it, but I think they know that they cannot stymie it anymore.
Trust me, brother. Elizabeth Warren will find a reason. Elizabeth Warren will find a reason.
Oh, she will. She will. Although things are looking up, right? Because we retained a House, we flipped the Senate, which means the Senate Banking Committee is more than likely going to. So right now, ranking member for the Republicans is Senator Tim Scott, and we know that he is pro crypto. Remember, a few weeks ago we went over. Charles was having a meeting with him. Again, fueling the speculation that Charles is going to be involved somewhat within the White House, right? So that's probably going to flip. He's going to be the chair of the Senate Banking Committee, and then Sherrod Brown, who's the current chair, is probably going to be the ranking member because I mean they flipped, right? The Senate is now in Republican majority. So when Tracker said that the rails are greased for crypto, that couldn't have picked a better description.
I agree as well. I think Trekker also had a very good point regarding the international chess match going on with regards to crypto, which is a perfect segue into our article from Reuters talking about our distinguished figure number 2 of the evening. That is none other than David Sachs, who's been appointed as the AI and crypto czar. Got another video here for you. This one's a little bit shorter, but still good stuff. Here we go.
Good evening, America.
Donald Trump has named former PayPal executive David Sachs as AI and crypto czar. In a social media post, the president-elect said Sachs would focus on making the U.S. a world leader in both fields. He says his administration will ensure, quote, the crypto industry has the clarity it has been asking for. Trump once labeled such currencies a scam, but embraced the sector during his election campaign. His victory has seen Bitcoin surge on bets that the new administration will be friendlier to digital assets. This week, the top cryptocurrency broke through the $100,000 level for the first time, though it later dropped back. It's up around 50% since Trump's election win. Sachs was formerly chief operating officer at PayPal. Among other things, he also founded the business social network Yammer. He was an early advocate of cryptocurrencies, saying in a 2017 interview that Bitcoin would revolutionize the internet. One analyst told Reuters that Sachs was seen as a strong backer of crypto with a history of investing in tokens besides just Bitcoin. Earlier in the week, Trump named strong crypto advocate Paul Atkins to run the Securities and Exchange Commission. That added to optimism for the sector, with the U.S. financial watchdog hitherto seen as unfriendly to crypto.
There we go. Paul Sachs, former PayPal executive, now the AI and crypto czar. Tracker, in reference to the international chess match, one of the things that is specifically pointed out here is that one of the previous Donald Trump promises on the campaign trail was to ensure that the United States becomes a haven for industries for both AI and cryptocurrency. Under Gary Gensler's leadership of the SEC, unfortunately, they scared away a lot of that business, but I think this is one of those moves that they're making to try to bring it back. What do you guys think? Is this going to be enough? Is this going to be effective?
So I'll inject here. So David Sachs, man, he's got a long list of companies that are in the technology industry for quite some time. One of his first gigs was with McKinsey Corporate Company. The McKinsey is a huge international juggernaut for consultant firms. And if you never looked at McKinsey, look them up. They're massive. Most people have never heard of them. And yeah, he was with them. Then he goes over and does PayPal as a COO. So he's familiar with payment systems around traditional finances. He's very familiar with that. He also has a laundry list of other technology companies that he's been associated with since then. As a little caveat, which I find interesting, is that he was born in South Africa, right along with Elon Musk, which I find very I find it very interesting. So it's just a little caveat I threw out there. So it's just interesting that some of these players from similar backgrounds should, they might play very nice with each other because they have similar backgrounds, technology, as a young kids, growing up there. I'm just saying there's a reason why some of these people seem to gravitate to one another. And I think him and Musk and others are just going to flourish in this environment. If anything, if they have debates and arguments, it should be to help refine solutions.
Yep.
So I think it's a solid pick.
Yeah, agreed. Aside from being the chief operating officer of PayPal, there's a few other funny things that I found about him. Apparently, he was interim CEO of Zenefits. It's funny to me because an old friend of mine, actually, Zenefits has a big home base here in Arizona, and a buddy of mine worked for Zenefits for a period of time, and then I come to find out that He's also served as interim CEO for Zenefits, so that was pretty funny to me. And then he has his own venture fund, right? He co-founded Craft Ventures, and then aside from crypto, obviously, he's been involved in investments in a lot of pretty familiar tech companies that should be familiar to you folks. For example, Meta, right? Facebook, Uber, SpaceX he did, and then what's the other one that he did here?
There's a
Airbnb.
bunch.
Yeah,
There's a bunch,
Airbnb.
man. Angel investments. Yeah.
Yeah.
Rumble's an interesting one because that's a obviously everything goes on Rumble. There is no censorship. I don't know
Yep.
what can censor you on Rumble, honestly. But
Yeah.
yeah, to answer your question, the Angel Investments was a venture capitalistic. I mean, he was with that did all these Facebook, Gusto. You already mentioned Slack is another one that was on there. Uber, you already mentioned Uber.
Yes.
All these disrupting technology companies. So
Yep.
you definitely have a very tech savvy guy who's supported and backed and then ran these companies from an investor and also from chief officer groups. So
Yeah,
pretty stacked.
And then-
pretty stacked.
And then also he's into podcasting. Some of you guys might not be familiar, but he's actually a co-host of the All In podcast that talk about crypto. They talk about economics. They talk about politics. They talk about technology, right? Because they're all big into technology, and finance. So this guy is he's up with the times, as they say, right? As the kids say. But some people might be asking the question, like, what exactly would the crypto czar position do? There are things that he will be able to do, and then things that he's not going to be able to do, right? So first and foremost, he's not going to be able to create regulation, right? Or he's not going to be able to create law. That job is strictly for Congress. He's strictly in an advisory role, right, to the president. But more importantly, he's going to take on an advisory role for Congress, which is still important, right? Because Congress, as we've spoken about over the course of this of the show, they're going to work hand in hand, not just with David, but also with the SEC and their new commissioner, in creating that good regulatory framework that would allow crypto to thrive here in the States. Also, he's probably going to help considerably in moving forward or helping fulfill the very lofty promises that Donald Trump made during his appearance at the Bitcoin conference, the stuff that he's been saying about over the past year, right, during his election campaign. Just a few of those promises, right? Obviously, we are very familiar with the strategic Bitcoin reserve, which yet to be determined. About making the United States the crypto capital of the world, right? The haven, like Tracker said. There's also the news about potentially eliminating capital gains taxes on crypto assets that are established and created here in the United States, right?
Don't tease me.
Bro, man. And they could make it happen. That would be fantastic if that was the case, right? Bring people out of from Puerto Rico back here to the States. That'd be amazing. Creating the what is this called, the Crypto Advisory Council, and then one that has kind of gone over the radar because we've been shown a lot of shiny new toys and objects over the course of the last few months, but he's obviously going to be a big opponent of anybody trying to form a central bank digital currency, right? And so David being appointed as the crypto and AI czar, I think, is nothing but positives, right? He's obviously he has a much better track record, even better than Paul Atkins when it comes to the crypto space. And I think even though he's only going to be in an advisory role, that I think that's more than enough to get the ball rolling in a positive direction for us here in crypto, right? So I think good things to come from David.
Hey,
Absolutely.
Can I just inject one thing here that I'm curious? So to me, this whole crypto czar and AI, everything they're doing, I'm looking at it in just more than a technology think tank for the Trump administration that they're putting into place. That's how I'm taking the approach. You have Musk, you got all these other smart people there that are trying to solve problems. As long as the administration's willing to listen to their advice and them backing it up, supporting it wise, then it should be pretty good. But that's exactly how I'm thinking. This is going to be more of a think tank. Greasing out a roadmap for the United States to still stay protect and also stay strong in their own interests.
Yeah.
Agreed. Any final thoughts on this gentleman? Because we have one more to go.
I'm just going to say that he's definitely going to be the voice opposing Elizabeth Warren from the Senate. So
the day Elizabeth Warren gets bullish, that's the top, guys. That's the top.
True. All right, folks, let's head on to Man of the Hour number 3. That is Representative French Hill from Arkansas. He outlines the pro-crypto agenda as he is now the newly appointed House Financial Services Chair. So recently this last week, they released a very strong pro-crypto agenda focused on regulatory reform in the digital asset space, but there also are a few other larger macro or just finance topics, including some of the ones that we've just talked about previously throughout this entire year, actually. So jumping down here, we have a small video for you.
Oh, he was on CNBC? I was watching this clip earlier.
Relative to your support, for example, for crypto.
Yeah. Well, I'd say the third one, you asked for 3. I wanted to stop and give you a chance to talk. But the third one is digital assets. We need a market structure for digital assets. We don't have rules of the road. Under Chairman Gensler, we had just regulation by enforcement. This is not helping America succeed, not helping technological advance, innovation for Web3, the use of blockchain, both in publicly traded companies and in financial services. So that is the top priority for us. And our majority leader, Steve Scalise, has it on his first 100 days of the House is to move a regulatory structure bill for digital assets. And I also believe a dollar-backed payment stable coin for under U.S. law as well.
You believe in a Bitcoin reserve?
You know, I don't really, I have to say I know Cynthia Loomis from Wyoming. I heard her give her speech at the Bitcoin conference in Nashville. I understand why some people are attracted to that. I'd have to think long and hard about what the value of that is to the United States or the Treasury. But I am certain of this, that we need a fair-minded, fit-for-purpose regulatory structure for digital assets in this country.
There you go, folks. Words from the horse's mouth right there.
Very
Any initial
answer.
thoughts? A little bit, yeah. But at the same time, he is a political guy. Speaking of everything else not in the clip, though, there are 2 points in here that we've touched on. They are news stories earlier in the year. Number 1, their agenda talked about how their over-regulation has stifled smaller banks and driven consolidation in the banking industry, favoring large financial institutions. Does that sound familiar? Does that sound like...
BlackRock,
there we go.
Fidelity, Charles Schwab, Vanguard.
Centralization.
The
There
people
you
that
go.
can
That
afford it.
is... There you go. The death of the local and regional bank. One of the things they outlined here is they're trying to make it easier for those things to start up and survive. Number 2, he talked about the challenges facing capital formation in public markets. He highlighted the shrinking number of publicly traded companies in the United States, attributing this trend to the high cost and complexities of going public. This is obviously in reference to the New York Stock Exchange and how trying to do an IPO or a launch on there has become too expensive. And can anybody remember the news article from earlier in the year?
Let's see.
The idea of launching a new stock exchange in where?
The new stock, the 24-hour one?
In Texas,
No,
right?
Texas, baby. That's right. This is one of the key points of why they wanted to launch the new stock exchange in Texas, citing the high cost of the New York Stock Exchange. So there you go. And then obviously, sorry, go for it.
No, please.
I was going to finish it off and say that the last point obviously is establishing the digital asset regulatory framework. So these are the 3 main points of the agenda that was laid out by Mr. Hill, who, by the way, our young man here representing the fine state of Arkansas. Like we talked about, he is now the chair of the House Financial Services Committee. For those folks who don't quite remember their Schoolhouse Rock, all bills have to originate in the House, which means this is a very important committee for creating regulation because bills have to start in the House before they can make it to the Senate. Both sides of the process are very important, but this is a key player in a key position, which is why I think it is absolutely newsworthy.
Yeah, look, I agree. I think if I look at some of his comments and I take that blurb and I take some of his background, if there is going to be sort of somebody who injects a CBDC into the conversation, into a package of otherwise bullish, positive crypto rhetoric, it seems like it would be this guy. He mentioned it in the take, right? That he's more interested in formulating a dollar-backed stablecoin than in the Bitcoin strategic reserve. That to me tips his hand a little bit, right? Not that he's not going to pass pro-crypto rhetoric, but that they will find a way to get their pound of flesh in this next iteration, right? Not to be the bearer of bad news, but that is the vibe that I get from the guy's background. I think that he will, like you said, he will be a catalyst for things that get pushed forward and that get fed to him to push forward. But I think that he will. I'm curious. I'm curious about what happens with this guy and his connection to his interest in stablecoins, particularly U.S. government-backed ones.
Yeah, I'm actually a little bit more. I like French Hill, right? I think there couldn't have been a better person to replace Patrick McHenry. Unfortunately, McHenry retired this year. That's why we have French Hill succeeding him. If you've seen any of the Financial Services Committee hearings over the past year, you know that along with Patrick McHenry, French Hill is a very strong advocate of crypto, and he always pushes back. And it's always entertaining to see whenever Gary Gensler appears in front of the House Financial Services Committee, because those exchanges are always entertaining to watch. And so I actually think that he gave a good answer. I don't think it was political at all when he said that I'm going to have to look closely and study the value of a strategic Bitcoin reserve. I actually respect that a lot, because he's not just out here pandering to the industry, because everybody would have liked if he's answered yes to the strategic Bitcoin reserve, but he was like, no, you know what? I'm going to take a hard look at it and see what value it's going to give to the American people before I endorse on it as well. So I think that was actually a very good answer, to be quite honest.
Did he have the same stance about stablecoins? Did he have the same stance saying, I don't know if stablecoins are good or bad for crypto or for the US, or did he say, I think we need them?
So they did have a stablecoin hearing a little bit earlier this year. And he had favorable comments for stablecoins as well. Is that the question, Dace? Or
what I'm saying is you are commending his hesitance about Bitcoin strategic reserve. He doesn't have that hesitance about US-backed stablecoins. I'm just illuminating the difference there. That he's hesitant about buying the US government holding a Bitcoin reserve. He is not hesitant about a US-backed stablecoin. I'm saying there's a difference.
Okay. Yeah. That's all. I mean, if he presented it as a CBDC, I think that would be an issue. But I think there's other ways that you could have a US-backed stablecoin and it not be a central bank digital currency.
Oh, so, I agree. Yeah. Like I said, but I will be very closely watching what he does around that particular topic, given what you just said. The difference in the stance between his Bitcoin strategic reserve opinion is, I don't know, let's see. His stablecoin opinion is a much more made up stance. And so what are the nuances and details of that stance? I will be tuned in to find out, for sure.
That's fair.
To the untrained ear, I can understand where people look at the conversation that we're having here and they say this is a distinction without a difference, which is, so what if it's a stable coin produced by the government? Isn't that still a central bank digital currency? And the answer is yes and no. The answer is is it a digital currency produced by a centralized bank? Yes. But you really got to understand what are the poison pill elements of that kind of thing. The first one is obviously control, and the next one is inflation, and the third one is an attachment to anything worthwhile. So if you do have a stable coin like we're talking about here, it's going to be attached to something, and in this case probably the US dollar, which we do give a lot of flack to because it is it's one of the monetary tokens out there that has dropped 98% in value over its lifetime, which is not nothing. But at the same time, it's better than just the government creating whatever it wants to out of thin air. I mean, at least with the dollar, they have to put ones and zeros on a digital ledger, which costs electricity, or you got to make the greenbacks, which requires specialized paper, ink, and the know-how to do so. But overall, it could go either way. I'm personally not getting anything major either way on this one. Stablecoin legislation is something that I have been watching and I think is needed, especially when it comes to the capital gains argument earlier, which is should you actually be paying capital gains tax on like the minute, very microscopic fluctuation of a stable coin to another stable coin based on when you trade it? It's like, no, the point of the stables is to be stable. I personally am very much in favor of reform to the capital gains laws about, is every swap, do all of them need to be accounted for when it comes to your tax calculations, or could you just do a simple money in, money out kind of calculation? So I think these conversations are only just beginning, especially in Congress. I think a lot of people are going to be new to this kind of stuff, and I would not be surprised if we see more hearings where we get some people that look rather uneducated on the topic, unfortunately.
No, I agree. And I think
Well,
you
as
just
far
laid
as-
out a. Go ahead, Track.
No, finish your thought.
You just laid out a case in which you wouldn't need a government-backed stablecoin, right? If you properly regulate some of the tax legislation, why not keep it private? It's worked, right? Unless you're trying to get the government's hands in it. I'm a skeptic, right? That is what it is. So, like I said, I'm excited to watch.
Quite skeptical of the government right here.
Oh, I 100% believe that the government absolutely wants to get their hands in the stable coins. We've already seen that with the amount of Circle being bought up by BlackRock, who owns USDC. They own about 30% of that. And now you've got Trump, who one of his two people that was part of his elect committee that he already did, right? That is Howard Lutnick, who's part of the company who is the mediator between USDT. They are the ones that ensure that USDT is holding on their balance sheets their proper amount of billions of dollars that allows crypto USDT to keep printing, which we've seen massive flux of billions of USDT being printed over the since the Trump administration won. How many billions have been created now? It seems like every other day there's like another 2 or 3 million billion keeps getting printed up. So Cantor Fitzgerald is the company that Howard Lutnick is the CEO of. He's obviously been, like I said, attempted to Trump's team, and that Cantor Fitzgerald is the mediator of USDT. So there's already a massive close connection now to USDT. So conflict of interest, somebody can make a strong case for that, certainly. So I think absolutely the stable coins is probably one of their top things. I'm still, and I hope I'm wrong. The thing that scares me, it keeps me up at night, is that everything that's getting put into position is to eventually move into CBDCs. Whether that comes to fruition or not, that's where everybody needs to stand up and understand what that means. That is, I'm sorry, but that is the last line of defense before full, complete monitoring of everything. Like that cannot happen. Period.
And that's why I pointed this out.
I added a little bit more to what we were talking about, but I don't think people understand. Yeah, exactly.
No, you're right, man. He is in this position in the House, given his background. If it's going to happen, it's got to come through him, right, for the next 4 years. So he's the guy to watch.
Very true. All right, gentlemen, I want to kind of start putting our final thoughts together here. So we've talked about multiple Trump picks. We've talked about some internal congressional stuff going on. How do we feel about the overall direction? Is this notable change? Is everybody in alignment, or do we have any outliers here? What are we seeing and feeling?
Me personally, I feel good. I'm gonna echo once again what Tracker said. The rails are grease for crypto, even though it's funny because there's a last hurrah from Gary Gensler and the SEC and the Biden administration. You guys heard over the past few days, right? There's documents that came out from the FDIC under Biden actually saying you're going to freeze crypto-related activity on these exchanges, which is why more than likely Coinbase was freezing people's accounts, right? Because they were getting those cease and desist letters from the FDIC. So it's like they're trying their damned hardest to, even as they exit, to put a wrench into Donald Trump's pro-crypto stance and pro-crypto cabinet. So aside from that, man, it's smooth sailing. I don't know if you guys heard recently too, the FASB accounting rules were just changed, right? Before they were only able to claim the losses, right? But now they're allowing both the losses and the gains to be factored into their accounting. So imagine what that's going to do to MicroStrategy, right? Now that they can Now that they can basically account for the massive price appreciation that Bitcoin has gone through just within the last 3 months, right? Basically more than a double, right? That's insane. So like those kinds of things, right? The accounting rules changing, all of that in addition to all of the like the pro crypto cabinet members, David Sachs as the crypto and AI czar, Paul Atkins supposedly being tapped for the SEC commissioner chair, right? Gary Gensler leaving office. Everything is falling pretty nicely into place, right? Knock on wood, right? Let's not count our chickens before they hatch, but I think it for the past 2-3 years that we have been subjected to the tyranny of Gary and his SEC. I think please forgive me if I'm being a little bit over optimistic, but I'm pretty happy as everything stands.
I also
MicroStrategy has basically laid out a blueprint for all the other corporations to get in line. I expect there to be more of a flood, and with that rule change there, certainly will. That's all I got. Go ahead, Dave. Sorry.
You're good, brother. No, I agree. I think, I'm more bullish than the last little bit on the last article or segment would lead you to believe. By a long shot, the government will get their pound of flesh, right? We have to watch them. That's what they do. To some extent, it is a necessity of their function, given their current state. But with that being said, is it a move in a pro crypto direction? Of course. I mean, more than any of us could have hoped for. If I'm being honest, even a year ago, 6 months ago, I think we have an incredibly optimistic outlook, and I think we're in for a lot of exciting walk the block episodes.
That we are. The point for me on this is I think this is a major news story and something to pay attention to because the delta is so massive. I'm not saying that giant changes are good for financial markets. They're clearly not. They don't like them that much. However, this has been an interesting one because it's been a very optimistic change, which is we were going from a very anti-crypto environment through Gary Gensler leading, through Congress with Operation Choke Point, and just through the overall sentiment of crypto being down, whether you call it the bear market, whether it's just the adoption curve isn't there yet. But we've seen so many wins throughout 2024, and this is an excellent way to cap off the year, in my personal opinion, which is that we started off with ETFs. We had some great movement by Bitcoin in March, which dragged up the rest of the market. We've seen a lot of good promises from all politicians on all sides, honestly. Obviously, I think the Republican camp has leaned into it a little bit harder, but this election cycle, we saw cryptocurrency become a major topic, or at least something that people are trying to talk about more and more. And now we're actually seeing people make good on those promises, and we're seeing legitimate grassroots efforts and movement, not just in the presidential campaigns, but also internally in the government and regulators as well. So all these things, they are a massive change and shift in the way that we're operating. Typically, we really shouldn't be talking about who the head of the SEC is because it shouldn't matter that much. But we're going to go into this weird point where in the next few years, I imagine things are going to start looking pretty good. And then a lot of the longtime crypto folks are going to have this weird PTSD over this Gary Gensler guy. And then we have to re-explain to all the new people why this guy was so terrible. And they look at us like, why do you care about the SEC head for this? And it's like, that's how it probably should be. But not there just yet. Although I do think good things are to come.
To add to that, Xena, if anybody has not gone back, go back and look at all the major events that happened in crypto starting, we'll say, in 2022, and how we got from there to here. Sam Bankman-Fried debacle, all the stuff that happened there. I mean, if anybody were to make a movie about all this, they would probably think half of this has been made up. It's been the ultimate soap opera that unless you've lived through this over the last 3 years, it's been mind-blowing. Like every week it felt like something was going on. Everything from people being arrested to unusual deaths. I mean, it's like anything you can imagine. It just kept tacking on. Political parties getting donations from certain crypto founders, and then people, fighting amongst community members. It really has been the ultimate soap opera. It's been the greatest theater to sit back and watch this unfold, because when people look back at the traditional finance and saw how it's evolved into where we're going, this is the major turning point of these last few years have just been have changed the entire trajectory of how the financial institutions are going to function and work, for probably for the next 50 to 100 years. We're just starting to see it come to fruition because financial industry was the last thing to really adopt the advancements of technology. And it's rightfully so. They've stifled it because they don't want it to change. So it's something to be admired. If you haven't understand what's happened over the last 2-3 years, you can Google online and see a nice little timeline of what's happened, and you'll be in awe when you understand it all. If you can find something that actually has them all documented, first of all, but it's been fascinating.
True.
Gang, as much as I love to see Gary go, I think at one point he was very pro crypto. My tinfoil hat theory is that because he was he was in a very close relationship with Sam, I think him getting burned so badly by Sam just completely 180'd him, right? Because everybody looked at him and like, yo, you were buddy with that guy. Like you came onto their business and you let that snake slip out from underneath you. And so all of the blame went on him. And so he kind of went on this agenda to be like, yo, all right, well, I mean, if you're going to blame me, then I'm going to go after this industry with a vengeance. I think that's what happened. I think once upon a time, Gary Gensler would have been a great SEC commissioner for crypto, but he got burned by the fallen golden boy.
True.
And for those who don't know, Sam Bankman-Fried.
There it is. Yeah. Crazy hair man. And then also Caroline Eastman, the estranged ex-girlfriend with terrible court drawings. They really did her during their hearings. All right, folks, we are going to move towards our end. But before we even get to that point, I do want to thank all the excellent people out there that have joined us for the maiden voyage of Walk the Block. Just started off, we got a good friend of ours, Mr. Angry Twinkie. He says, ooh, shiny, a new show. And then also we got Brother 64 coming in there. Congratulations on the new show, gang. Set looks great. Much appreciated, gents. We are hoping to keep having more and more polish stacked on to each of these episodes to make it better and better. Speaking of people that hopefully we'll see some of that polish, we have No Money Mike saying he's going to have to catch replay tomorrow. We appreciate you greatly, and we appreciate everybody else on Replay Gang as well. And then we even have 2 more folks coming in here. We got RH Max himself says, good evening, gents. Good to see you, Max. I know you've been busy streaming lately as well. Been having a great time whenever we pop over on your channel. So thank you for having us. And you are always welcome around our circles, my friend. And then last but not least, we have our buddy Just Live. He says that he also supports the Paul Atkins SEC appointment as long as neither Dodd nor Frank are involved in it. That's a good one, actually.
Clever.
Like it. Very clever indeed. All right. And hey, last but not least, we got Will Stevenson's saying like that smash button. Yes.
Who is that
good
guy?
to see you, buddy. Yeah, we never seen this guy before. What? Always a pleasure. All right, folks, let's go around the horn. Mr. Tracker, where can the folks find you and what do you got going on?
Telegram Tuesday, and we're all up in the chats. So if you guys aren't familiar with our chats, get in Telegram chats. We throw out a lot of information out there, try to help people out, and that's where the community pretty much lives on the DGen Roundtable. That's pretty much where you'll find me, and more to come here. Short and sweet.
Love to hear it. All right, Agent Jay, what you got?
Well, if you want to find me, you could find me on X at _P90Hex, on Instagram at agent_J Schroth. And you can find me at the DGen Roundtable. Telegram is open for everybody. And if you want to get the alpha first, you go and get it there. As always, we know that time is your most valuable asset. So we do appreciate that you spend some of that time here with us on this wonderful Monday evening. You could be anywhere else, but you're here shooting this shit with us. So thank you once again for joining us this wonderful evening on the maiden voyage of Walk the Block. Until next time, Dace.
I also will be there Telegram Tuesdays, DGen Roundtable. It is not quite so family friendly. It is the DGen Roundtable. So if that suits your fancy and it fits your palate and your appetite for consuming more of this content, potentially even more granular, even more in depth, and even more DGen, find us Tuesday. Mr. Will Stevenson is in the chat asking for a link. I don't have a link right this second. I'm going to find one and drop it in the comments. Come join the DGen Roundtable on Telegram. Check us out every Tuesday. We'd love to have you there. and see us back here next Monday night as well.
True. Speaking of links, folks, you can find everything going on with this channel on our social medias. That's going to be YouTube, Instagram, and Twitter. Primarily YouTube, then Twitter, and then Instagram. It'll just be more of the fun stuff, so to speak. But all of the ats are going to be up there. We have Walk the Block NDF as the tag on all of them. YouTube.com/@WalkTheBlockNDF. That's how you get to it. Same with Twitter. And then we'll be posting all the links around there going on. Additionally, stay tuned and be on the lookout for additional shows. We will be getting a community Telegram going for that as well. And we're going to have even more content on this channel. But as Agent J said previously, thank you so much for joining us today. We know that time is your most valuable asset, and we want to make sure that we thank you every time you spend it here with us. So, folks, until we catch you guys next time, we hope that everyone has an excellent end of the year. Happy holidays, Merry Christmas, whatever your thing is. But until then, we will see you guys next time. Thank you very much. Bye-bye.
Bye-bye.